Real estate and stocks are two of the most popular investing options. Both can be profitable, but each has its own risks and rewards. So, which one is best for investing? Okay, well, it depends on varieties of factors, includes how much you have to invest, your risk tolerance, and your overall investment goals. To help you make an informed decision on which investment opportunity is right for you, we will take a close look at the nitty-gritty of investing in real estate and stock markets. Real estate versus stocks market investment. Which one is better? What is real estate? Real estate is a form of real property, meaning that it is something you own that is attached to a piece of land. It can be used for residential, commercial, or industrial purpose, and typically includes any resource on the land, such as water or mineral. What is stock market? Investing in stocks involves buying a small slice of company shares and waiting for those shares to increase in value. So in this video, we will consider choosing real estate over investing in stocks, or choosing stocks over investing in real estate. Okay, in terms of choosing real estate over investing in stocks, one is stability. Real estate investments provide cash flow and can be hedged against inflation. The ease of stock trading is the downfall of many investors. While up and down market cycles are inherent, it is hard to stay invested when the market drops, even though research shows that trading in and out of stocks during volatile times leads to losses. Since real estate is a less liquid asset that takes more effort and time to sell, you are likely to hold on to it through market cycle. The second advantage of real estate over stocks. The stocks market strategy of buying low and selling high is challenging for most investors due to the complexity of analyzing individual company sectors and making. In contrast, real estate offers distinct advantages. Each property is unique, creating diverse opportunity for buying below market value and selling for profit after improvements. Unlike stock market, real estate markets are decentralized, allowing investors to find deals and capitalize on geographical pockets for high demand, making buying low and selling high more achievable strategies. The third advantage of real estate over stocks is control of investment. With stocks, trying to time the market is a loser game that even the experts avoid. With real estate, timing the market is possible and can lead to huge gains. The housing market is more stable and predictable than stock market. A tweet from presidents does not cause a dip in the price of homes, but it could cause a sell-off in stocks. The force that move housing price happen gradually, giving investors time to make informed and smarter adjustments in their holdings. The fourth advantage of real estate over stocks is inflation hedge. Home price typically adjusts up with inflation. This is because housing is essentially a consumer good, and inflation causes the price of consumer goods to rise. Stocks don't have a built-in inflation adjustment, and stock prices can and often swing widely. diluting the value of your share instantly. A significant drop in the market, such as what we have seen in the past, can reduce your principal so much that it could take you years to recoup your initial investment. The fifth advantage of real estate over stock is tax advantages. Real estate investors get a tax benefit called depreciation. It means they can deduct a proportion of property's cost every year for 27.5 years. The interesting part is that while the property's value usually goes up, they still get the tax break for depreciation. Below market value and selling for a profit after improvements. Unlike the stock markets, real estate markets are decentralized, allowing investors to find deals and capitalize on geographical pockets for high demand, making buying low and selling high more achievable strategies. Now, let's look at choosing investing in stock over real estate. The first advantage for investing in stock over real estate is transaction cost. Hands down, stock trading has much lower transaction costs than real estate. You can trade stocks and ETF commission-free on a host of online stockbrokers today. No tangible asset is being exchanged, so the transaction is quick and impressive. On the other hand, real estate is a longer-term investment, in part because transferring real property from one person to another is expensive. You have title fees, attorney fees, agent commissions, transfer tax, inspections, appraisals, and other inherent costs. The second advantage over real estate is stocks
Liquidity.
are by far much more liquid than real estate. With a few clicks on your computer, you can trade in and out of just about any stock investment nearly instantly. Real estate is a tangible fixed asset that requires an involved transaction between real buyers and sellers. It takes time and a tremendous amount of effort. If the local market take a dive, you can't just pick up a house and move it to a better location. The third advantage is less complicated. Both real estate and stock investing demand a lot of research. With stocks, you are investing in a company and you will want to know as much as you can about its financial management and future earning projection before you invest. With real estate, you will need to do research into the location, past and projected property financial and property conditions. Compared to stocks, real estate requires a lot of hands-on work in addition to research. Even if you hire a property manager to oversee tenant management and maintenance, you still need to provide a fair amount of ongoing oversight. The fourth advantage over real estate is easier, less work. Stocks can be put into passive mode. You can set and forget a chosen portfolio of mutual funds. Dividend stocks pay out dividends with no effort on your part, and you can automate your account to have dividends reinvested or a check sent to you. Real estate require more time and effort and can't really be put on autopilot. The fifth advantage over real estate is diversification. Stocks allow instant diversification with even small investment amounts. You simply choose a few diversified mutual funds or an index fund. It takes a lot more money to properly diversify your real estate holding because you need to buy various type of properties in multiple locations to spread your risk, and each individual property require a sizable outlay of cash. Of course, you can diversify in real estate through real estate investment trusts, which are more like buying shares of stocks than buying real estate directly. Fundraise e-rates are a great way to this. So which one is better for investment? Real estate or stocks? The answer depends on your investment goals, risk tolerance, and financial situation. Think of it as an apple to orange comparison. You can't say which is better, but you can decide which one is right for your unique circumstance. Here are a few things to consider. If you are looking for a long-term investment, real estate may be better option. There are no guarantees, but real estate tends to appreciate in value over time. If you are looking for more passive investment, stocks may be the way to go. Once you have bought shares in a company, you can sit back and let your investment play out. For investors who are risk averse, real estate may be the more appealing investment, although there are possibilities that property could lose value. It's typically less volatile than stock. On the other hand, if you are comfortable with risk and looking for a high potential returns, stock may be the right investment given historical rate of return. Stock have the potential to generate more wealth than real estate. Okay, invest wisely. No matter what you decide, remember that there are no guarantee when you are investing. But as long as you are comfortable with the risks and you are making informed decisions, you are on the right track. Whether you are looking for a long-term investment or something more passive, real estate and stock both have the potential to generate wealth. Just remember to do your research and invest wisely. So as we have come to conclusion of this video, don't forget to like, subscribe and share this video. Until I see you next time, peace.